Hello, everyone. I'm Amy Listischenberg, Vice President of Industry Solutions for the Consumer Brands Association. We're excited you have joined us today for the Industry Insights session, Finding Growth Opportunities for CPG Supply Chains. This series provides overviews of broad topics that are top of mind for CPG professionals. We have a couple of housekeeping items before we get started. Everyone's line was muted upon entry to reduce background noise. If you have a question during today's session, and we certainly hope you do, please submit it using the Q&A button at the bottom of your screen. We've saved time at the end of the session to get to your questions. So let's dive into it. While retail business models and the rapid increase of channel options for consumers create new revenue streams, they also introduce additional cost and complexities for the CPG supply chains. Still, ample opportunities exist for CPGs to grow and create deeper connections with consumers by taking advantage of the new digital landscape. I'm pleased to introduce our speakers for today, who will share how CPG companies can create a fit-for-purpose supply chain. Joining us today are Adheer, Bahulkar, and Chris McDivitt, both managing directors with Accenture. Adheer and Chris, thank you for joining us today to share your expertise. The floor is all yours.
Great, thanks, Amy. Hello, everyone. So let's get started. Hopefully everyone can see my screen. All right, so quick introduction. Two of us. Myself, Adheer Bahulkar, 20 plus years in consumer goods industries and retail, most of the work in end-to-end supply chain strategy, and in recent years focused a lot on how supply chain can enable new growth for consumer brands as well. Chris?
Yes, everybody. Chris McDivitt, North American Consumer Goods Lead for Accenture, Managing Director, 25 plus years experience, really doing products oriented supply chain. So CPG, retail, industrials, automotive. Happy to be here and hit our topic for today.
Awesome. So wanted to kind of have two such topics that we wanted to cover today, kind of really ground ourselves on what is changing in the marketplace, which I'm sure everybody in the audience here is going to be very kind of top of mind. But what specifically is becoming the role of supply chain and how supply chain can enable growth? I think that's kind of the first aspect. And the second aspect we wanted to then get into is how are supply chains going to build themselves to really benefit from this potential growth? And I think hopefully with that, we'll look for some questions as well. We've looked at this data across 22 countries, in fact, and essentially what we are beginning to track is how consumers are making their buy decisions is slowly but surely shifting. And 10 years ago, 20 years ago, when she walked into the store, she would probably look at kind of her brand first, right? She would go to that aisle. Then within her brand, she would look at the price. And then she might look at fragrance and kind of packaging, et cetera. But as you can see from the data, we're beginning to see that while brands are still important, the relative importance is beginning to shift. And more consumers are beginning to make their buy decisions on the brick and mortar shelf or a virtual shelf, either based on service, and service essentially is kind of how fast can I get it? Can I get it where I need it? And what we're bundling under the product idea. Product is a combination of both, kind of exactly what I want. So my flavor, my fragrance, my ingredients, but also the broader concept of sustainability, which is also kind of bundled under product here. And what that means is tomorrow, when we look at kind of in that purple shading, a big part of how consumers are going to make their buy decisions is directly impacted by supply chain. I think that's a fundamental notion where historically supply chain was always seen as supporting growth. I think we're now beginning to see a shift where leading brands are beginning to understand the role of supply chain in enabling kind of new growth as well. And directionally, especially in the US market, what does that mean in terms of the requirements for supply chain, broadly speaking, I think we're seeing most future designs 2025 onwards looking at 20 to 40% of total sales becoming e-commerce. And when we say e-commerce, doesn't necessarily mean one or the other. In fact, we've defined 15 plus different fulfillment models that e-commerce will entail. The idea here is that the legacy network of capabilities and assets is really unfit, both from a consumer brands as well as from a retail perspective. The variety that we are expecting in the future to really benefit from this growth and the importance of product on the left-hand side, we're beginning to see a big push on, we want to have more 5x to 10x more planograms capability. And when we think about personalization of product, customization of product, how do we enable, if not endless aisles, at least extended aisle offerings between my kind of physical shelf and digital shelf, is creating a significant kind of explosion in future variety that I want to be able to offer as a brand. Fulfillment, and we'll get to this a little bit, is as e-commerce becomes kind of more of a dominant kind of fulfillment model, the need for more proximity to consumers to really be able to enable that speed of 1 day, 1 hour fulfillment is going to create a significant increase in number of ship-to nodes. When you think about, we can't just ship to the large regional warehouses. Ultimately, the product has to be within a short radius of the end consumer so that we can enable that 1 day, 1 hour fulfillment. So a big theme, growing theme of future supply chain designs is really, if the consumers are going to make decisions and how they buy directly influenced by supply chain capability, then clearly supply chain is going to become the new growth engine. And we need to design a supply chain that can benefit and deliver that growth. Our legacy supply chains from a consumer goods perspective were, in hindsight, fairly simple and very linear, quite predictable, again, in hindsight. We used to have our kind of sourcing. We have these mega plants, which are going to really leverage scale. We had our own warehousing and distribution centers, which across the modern trade and some portion of traditional trade, ship the product to their retailer distribution centers or the distributors. And from there on, the retailers took it on themselves to deliver it to the store. Consumer walks to the store, gets the product. I think already we're seeing, and this is really a simplistic view, as many of you will recognize, that this complexity is already here today, and it's only going to increase. So when you think about all the additional kind of routes to market that are now popping up between not just the physical stores, but our own brand.com sales, retailer.com fulfillment, as well as marketplace.com fulfillment models, it's creating a significant complexity in the overall network. Now, one looks at this and says, okay, more complexity means more costs, but if I'm not selling more, then how do I justify the cost? Well, that's the time period we are in today, where most supply chains from a macro trend perspective are seeing cost increases. But leading brands are now beginning to understand to say, if we do this right, then we can actually create disproportionate growth in the market. The idea here behind this kind of visual is also a couple of things to ground on is, if you think about the significant emergence of micro fulfillment centers, and a given retailer might have a few dozen or a few hundred micro fulfillment centers, the idea is that these will be relatively smaller centers than the mega DCs, but these are much closer to the demand, much closer to the population hubs, if you may. And inventory sitting in these micro fulfillment centers will be essential to be able to deliver sort of an order to fulfillment lead time of 1 day or 1 hour, especially as we think about the top 13, top 15 kind of metro markets in the US. These MFCs will become predominant in terms of how e-commerce is expected to be fulfilled. And from a brand perspective, where historically brands used to ship to a handful of large regional warehouses for a given customer, now that product has to get all the way to the micro fulfillment centers. And if you think about that fragmentation of demand, to say my inventory was sitting in 5 locations, now it's sitting in, let's say, 50 locations, I was shipping to 5 locations. Now I'm shipping to 50 locations. Clearly, my cost is going to increase, but my inventory is also going to be exploding. And I think the big takeaway already we're seeing is historically where carrying more inventory could solve a lot of our kind of challenges. Going forward, the mistakes are going to be very unforgiving. And I think that also kind of really emphasizes the importance, say, in this increasing complexity view. Yes, brands who get it right will be able to drive disproportionate growth. Why? Because they have that service capability, they have that product nuance to be able to serve localized markets and localized demand. But the capability perspective in terms of their ability for precision planning, et cetera, will become really, really critical. And all of this is happening under really high-level design parameters of, let's assume future product lifecycle is going to be half of what it is. Why? Because the consumer need for innovation, if you borrow the phrase from the apparel side, fast fashion, is clearly coming into the CPG space as well, where they expect more newness, they expect more variety, and the increase in the number of network nodes and planograms creates a significant complexity from a supply chain perspective. Of course, these are macro trends in terms of the growth of e-commerce, which obviously during the pandemic and recent disruptions accelerated, and we're still waiting for that to settle. I think top of mind today is also the idea about kind of supply chain disruptions and how do we kind of, as a supply chain, ensure the business continuity when our costs are really kind of becoming unpredictable, supply assurance, everything from logistics and transportation to core commodities is becoming very questionable. The availability of kind of talent and even workers from a manufacturing perspective, distribution perspective is becoming significantly constrained. And the inflation of some of our pure buys and pure commodities is also becoming a challenge. And I think there was a sense earlier that maybe this is once in a generation, once in a decade type event. Let's just kind of buckle our seatbelts and we'll kind of make it through. I think increasingly we are seeing that this is how supply chains are now having to operate. And I think that's another big kind of parameter of how future supply chains are going to be designed, is how do we deal with these sort of disruptions on an ongoing basis. And finally, perhaps one of the biggest challenges most supply chains are facing is for consumer brands, the biggest exposure they have from an ESG and sustainability perspective is from the supply chain. And when you think about the significant kind of tier 1, tier 2, tier 3 exposures across suppliers and their suppliers, the massive exposure we have on the transportation front, all the way from the first mile to middle mile and the last mile. And of course, the manufacturing using some of the more constrained resources and commodities and water and agriculture, et cetera. A lot of that expectation of how brands will deliver on the promise of responsible growth is falling on supply chain as well. So far, I don't think we're saying anything new. What is new, however, is kind of how we see the supply chain being designed in the future. And many of you who kind of maybe grew up in supply chain a few years ago, at least kind of when I started understanding supply chain a few decades ago, we were always told that supply chain is kind of the balance between these 3 parameters: cost, service, and quality. And to be good supply chain, you need to be good at least one of these 3. If you can get good at 2 of them, you are really great. But it is a trade-off, right? And how you balance between the 3 is really kind of how supply chains are defined. But we really see this view of supply chain as dead, as obsolete and incomplete. The new supply chain is really built around the 3 different parameters of agility, sustainability, and resiliency. Now, a simple question is, words that we understand, we hear a lot, what do they really mean? And what we wanted to do was maybe put some definition behind this for the audience as well. And when you think about agility, the idea is that, yes, reliable service is not going anywhere, right? So our expectations of on-shelf availability, on time in full, et cetera, are still continuing. But what that's evolving into is the traditional one-size-fits-all service model is no longer viable. And most supply chains will need to gravitate towards a more segmented view of how they define service levels. So what I can do for my tier 1 customers and tier 1 SKUs is different from my tier 2 and tier 3 customers and SKUs. And this segmentation of service is really critical to be able to ensure that when I need to be agile, I'm being agile where I need to be and not having to move my entire supply chain just for a one product launch or one customer requirement or one supply disruptions. And what that will require is single speed delivery models will now need to evolve into multi-speed. And more importantly, when you think about flow paths in terms of for every given order, I have defined a static view of where do I source the product from and where that product ends up, in which customer, which warehouse. Those need to be dynamic. Those need to be flexible so I can change my flow paths on an ongoing basis. That's really kind of what agility in supply chain is going to be requiring. When we think about resiliency, in supply cost focus, which of course is still always going to be there, is now already shifted significantly to supply assurance. So how do I not just have single source view of my suppliers, but I have alternates and have contingency plans? How do I create a more proactive view of likely disruptions to happen and already have a playbook, a menu of options and scenarios that I can quickly switch to so that I can kind of mitigate kind of potential risks and potential challenges to my supply? And a big part of this is to say, when we were cost focused, we looked at cost to serve as one of the more important dynamics, is now going to shift to more of a profit to serve lens. And what do we mean by that is many brands in the recent years have had no choice but to go to an allocation mode. Say, I have more demand than inventory, so I obviously need to decide and choose which purchase orders to fulfill. And I think this is a golden opportunity where the leading brands started realizing that if I can start making those decisions based on the profitability of each and every order, then I'm really advantaging myself in terms of how I manage my overall costs and overall profitability. And I think to extend that mindset across the entire supply chain to say everything from how many SKUs should we have in our portfolio, how do we quantify the cost of complexity, all the way down to S&OP and S&OE execution. So if we can start making decisions based on profit to serve, then we are really positioning ourselves well in this future, more complex, more expensive kind of environment, where we have the essential mindset and the essential capability to make decisions that are profit maximizing. And finally, on the sustainability front, somewhat kind of straightforward, easy to understand, but very, very difficult to do, is the idea to say kind of that previous mindset of just product quality is now really, really expanded into also, in addition to quality, having enough capabilities to be able to promise that we are good for the environment, we're good for the society, we're good for the community. And tactically, from a supply chain perspective, when we think about words like reuse, recycle, repurpose, transition from single-use platforms to multi-use platforms, whether they are kind of primary packaging, secondary packaging, but also assets, also kind of big infrastructure investments, the more multi-use we can create. And by the way, multi-use can also mean across industry, across our peers, is really where the direction is in terms of how do we really leverage the combined strength and the capabilities of at the industry level, and ultimately going to kind of net zero commitments from an ESG perspective. So all of this combined really kind of creates a big view on what that future supply chain needs to be. And from a mindset perspective, how do we become more agile, more resilient, and more sustainable? So with that kind of precursor to kind of how we see the role of supply chain changing, becoming more of a growth engine, that will require supply chains to adapt and create a new set of capability, while on one hand, really maximizing kind of the growth potential that we see in the marketplace, but on the other hand, also using smart capabilities to make sure that they can ensure responsible, profitable growth. And from a capability perspective, maybe I'll hand it now to Chris to maybe walk us a little bit into what does that mean in terms of discrete capabilities that supply chain needs to build all across kind of design, buy, plan, make, move, and sell? Chris?
Excellent. Thanks, Adheer. Move on to the next one, I guess. So, when we look at enabling these new design parameters of agility, resiliency, and sustainability, we're going to need new and differentiated capabilities. And I will say that every CPG will definitely need these essential building blocks of control tower, digital twins, and 360 value meter. These will be essential. And it's interesting in conversations with our clients. Many don't know truly the depth of the meaning or the capabilities of these three essential enablers. So we thought we'd spend a little time and draw clarity to that. Starting with control tower, where it's visibility, what we call visibility always on, right? And that's being proactively alerted to that demand and supply disruption, and then being able to action on that. And that's where we've seen the use of digital twins, where you're able to really perform that what if analysis and understand the trade-offs, both operationally and now financially, and frankly near future also from a ESG perspective, right? What are those trade-offs that allow me to serve the customer or consumer in the most profitable growth way that allows me to do it in a very sustainable way? And we're seeing more and more asks of the consumer to provide that product traceability and transparency, but also along with the ESG performance visibility of your organization, to provide that level of trust that you're doing good for the planet and society. So if you look at these, they all kind of have this underlying theme of you'll need to always be on. You'll need to be more fact-based than ever and intelligent. And to do that, to really enable these three building blocks, you're going to need a new set of select capabilities across your value chain domains. So if you go to the next one, Adheer, this is our perspective of what those core themes of enablement you're going to need across your value chain domains. And the idea is that you're not going to be, to the right-hand side of the slide or next in every domain. That's not plausible. And frankly, if you think about your current supply chain maturity, your brand and category growth strategies from a cost, price, speed, convenience, those strategies and segmentation strategies are going to help you really determine, what are those next themes that you should be getting after, right? And so if, cost per price, is your thing, getting to, the right side of the page in your make and move domains is going to be important. If you, if you're, really want to be core focused on, understanding your customers' demand and being able to sense and even shape, that demand, that takes on a whole nother set of capabilities. And there's a double click into these distinct and I'll just say these distinct, capabilities underneath these themes that we've built under these domain areas. And just looking at plan, for example, of being able to understand that demand signal, getting into, your getting into that next level of capability of bringing in external data to really be able to, predict and sense near-term consumption of your demand is going to be important. And then frankly, to have that Amazon effect of what we see every day of, being able to shape, your consumer demand for certain categories of your business is going to be important. And we've built a couple examples of what that would look like. And, the next slide is a double click into plan, where, it really starts with, data, right? And being able to harness not just your traditional internal data that allows you to do your linear regression forecasting for demand, for example, but also to harness external sensing data, right? And as well as, leverage visualization and decision science or intelligent tools that will allow you to model, right? And allow you to understand those financial trade-offs from a cost to serve or an opportunity loss perspective. But also to even start to consider and use cloud-based solutions, such as the metaverse, which, if you think about it, allows you to start to collapse time and space constraints for really real-time, cross-functional, and even cross-geo decision-making and problem-solving, right? So if you can imagine running, S&OE processes across geo and functions, really allowing you to, exploit demand situations that you would come across, or disruptions that you would come across in your near-term, operating windows of making those S&OE decisions. So just, some examples of I'll say select capabilities. I think Adheer, I'm going to pass it back over to you and talk through a couple others.
Thanks, Chris. And one thing I hear also to point out, from a workforce perspective, before we move to the next example, is on the left-hand side, you see forecasting, sensing, and shaping, all building on each other. The last sentence in each of those is really important as well from a workforce, right? To say, in the future, yes, on one hand, we can't really keep on adding resources to be able to do all three at the same time. But I think a lot of the math and science of demand forecasting, for example, is really ripe for automation. So we're seeing a big trend where a lot of those decisions where historically there used to be people doing keystrokes is now becoming highly automated. The demand sensing becomes ripe for a decision augmentation, right? So I think, again, think about from a workforce perspective, where when we hear phrases like exception-based planning is really where demand sensing becomes very, very opportune. To say 85% of our decisions don't need a human intervention, but the 15% we could benefit from this augmentation. And then finally, the decision support, again, from a workforce perspective, is are there capabilities either from an analysis, data, visualization, et cetera, that we can start envisioning in the future where we can make fast decisions with the right decision support and analytics supporting that, right? So really a broad-based view of what type of future capabilities will enable future workforce as well. And another example.
That's actually just to add into that, because I think that's critically important, because we see this across, all domains, right? There's ripe opportunity to apply and really stitch together rule-based and judgment-based automation, right? That allows you to elevate the role of that supply chain practitioner, in this case the planner, get them out of non-value added activity, but also address tactical decision making, right? So where you have a category of your, or a segment of your business that's high volume, high stable, and you have planners balancing demand supply, that that's ripe for autonomous decision making or cognitive capabilities, where you have that stability in your business and those types of decisions could be addressed and get you into the intelligent automation journey.
And another example we thought might be interesting from a distribution and move capability perspective is, again, kind of what is the role of kind of supply chain become, and how it can be kind of enhanced through the right technology and the analysis. I think most of you will recognize that used to be that major brands, CPG companies would do and reset their network model. And when you say network model, kind of my plant locations, my DC and warehouse locations, and how I serve my customers. And we would do a network model kind of once every 3 years, 5 years. And based on that, kind of, we would then kind of assign specific flow paths to say this plant produces X, it goes to these kind of 3 warehouses, and from these 3 warehouses, I serve these specific customers. And then you operated in that mode for the next 3 years, 5 years, until there was enough of a shift, either through M&A or through just some changes in your portfolio or customer base, where you might want to do another network reset in the next 3 years, 5 years. What we're seeing now is, on the left-hand side of this page, is the beginning of any network models has to start with the supply chain segmentation view, right? To say, what are my channels? What are my customers? What is my assortment? What are the SLAs that I'm trying to fulfill for each of my product, my customers, my channels, et cetera? And what we're seeing is the segmentation of supply chain is changing very, very rapidly. 2-3 times a year, we're seeing significant shifts because of some retailer kind of modifying their fulfillment model, because of our internal aspirations for either DTC or how we think about enabling e-commerce, exclusive SKUs, proprietary SKUs, as we go into customization of product as individual brands, et cetera, as well as supply disruptions that are happening. So I think the idea that the segmentation of our supply chain, which used to be static for 3 to 5 years, is now significantly challenged, where even 2-3 times a year, a lot of these requirements are being kind of changing. The next step to say, even once we have the network design, to say, these are my distribution centers, these are my warehouses, these are my fulfillment nodes, these are my manufacturing locations, and the capacity kind of underneath each of those. Then we look at what's happening in the market today. And for example, the big push on forward deployment of assortments, which either as a brand you are doing or as a retailer they are doing, in terms of having inventory closer to the consumer. The flow paths are also rapidly shifting. And one example of that is, as we think about localization of assortment, and how do we, let's say in the grocery kind of arena, go from 400 to 600 planograms today to a potential future where we are envisioning 4,000 planograms with intense localization of assortment, where even 2 stores or zip codes next to each other inherently have a different demand, and hence I will have a different assortment and a different choice. That requires your flow paths to also change very rapidly. And when we say flow paths, is while in a short time you can't really shift your DCs and capacities and manufacturing locations, but your ability to fulfill order in one local zip code has to be flexible across multiple sourcing locations. And even when we think about enabling kind of extended aisle orders, my ability to split the incoming order into multiple sourcing locations, bring those products together and merge that order for fulfillment is really kind of where we see significant opportunity for growth based on the shape of demand. But the idea is really that whole sequence of projects which used to happen, kind of let's redefine, update our supply chain segmentation view, based on which we do a center of gravity kind of network design and capacity analysis. And then we lock and load sort of our flow paths for the next foreseeable future. That needs to happen 3 to 4 times a year now, because I think the ability to really capitalize on near-term demand is really what's going to help supply chains kind of exploit that growth. That work, though, cannot be in a project mode, right? Just imagine those of you who've been through sort of a network design work, it's really a lot of tedious work, a lot of data building, validating of the models, running what if scenarios, and ultimately coming to a conclusion. We see a big area where consumer brands will need to have this continuous network planning as an ongoing capability. And what we are seeing building in the market is really what's on the right-hand side of the page is, imagine sort of all of that data, your transactional data, your shipment data, your portfolio master data, et cetera, sitting in the background, updated real time as you need it to be, right? Doesn't have to be once a day, it could be once a month or once a quarter. But really the what if scenarios, right? To say, as soon as I have a different view of demand, or as soon as I have a different supply constraint or challenge I need to overcome, how do I quickly run those what if models to be able to decide which flow paths are going to be more optimal for the next season, for the next product launch, et cetera. And I think especially as we see a bigger opportunity to make real-time fast decisions, going back to how supply chains will need to become more agile, we see these type of capabilities also becoming really paramount for supply chains that are going to be able to enable growth. So between the future of where we see the demand side going from forecasting to sensing to shaping, combined with this example of how we effectively can utilize our network of assets to really quickly, dynamically be able to shift our flow paths and make profitable decisions, is really where we see the direction for supply chain that are going to be enable profitable growth for their brands as well. And maybe a last couple of views, and after that would be great to get some questions, I'm sure, is really how do we build this, right? And our view and to many of our supply chain partners is that this is not really a supply chain question first. I think the brands and the enterprise at large needs to make a decision, say, what is really our growth algorithm, right? How our categories going to grow over the next 5 years, 10 years? Are we still relying on our brands, right? Our A&M, our messaging, our logos to drive that growth? Are we still expecting pricing to be a big part of that growth? For the right categories, for the right products, for the right brands, that may very well be the answer, right? In which case, yes, the role of supply chain may still be to support that growth with lesser expectation and ambition for supply chain to be enabling new growth. But for brands and for categories, companies that are coming to the conclusion, and we see a lot more companies falling into this category, that it's really product and service that are going to become more critical for how we win in the market. The role of supply chain needs to be recognized at an enterprise level, right? And it's not just a question of what supply chain can do by itself, but is the enterprise really enabling supply chain to have that ambition to be able to put the right design and the right assets and the right investments behind it to be able to win on product, to win on service, and really drive that disproportionate growth that we are seeing in the market. But a lot of the capabilities of which we illustrated on what that requires. One example of one CPG that might be interesting just in terms of how that work needs to happen is really on the left-hand side, starts with defining our future portfolio and how we are going to grow. And for this particular company with 5 categories that they had in their portfolio, 3 of the 5 categories were really where they came to the conclusion that our only path to profitable growth is going to be, we need to have differentiated service for categories C, D, and E. And we need to have a differentiated product. And just as a quick reminder, service is really when we say anywhere, anytime, and how do we have that speed and order to fulfillment. And product is, again, how actively we can support explosive variety and high degree of customization. So 60 to 80% of their new growth coming from categories C, D, and E was really what we look at that responsive quadrant. And yes, they have categories which category A and B did not quite meet that criteria, did not meet that bar. Doesn't mean that category doesn't survive, but they required lesser of the capabilities, right? So going back to the page where we said, not every brand, not every category needs to be advantage across all components of supply chain. But really for your categories, what is that right supply chain design that really needs to kind of complement the growth strategy? And for this particular view of that future growth, the supply chain build kind of, and again, just high level examples of kind of what that is. In this case, a big focus ended up on that plan and move buckets, right? To say design, plan, and move. So on the design side, we need to really kind of support high product innovation, speed to market, and really be top of mind from a consumer perspective. But what that also means is we need to be very, very disciplined about how we manage our portfolio and how we look at sort of profitability of our portfolio at all times. From a planning perspective, we just talked about when Chris described that demand shaping capability, real-time decision-making, and sort of the order splitting all the way to order merging really became a big part of their focus and investments. And on the distribution side, again, how do we enable at least kind of the readiness that in future, what if we had 40% of our categories going from all the way from pallet picking to each picking, right? Imagine if we are actually filling e-commerce orders on behalf of the customer or for our own DTC ambitions. All of these became big parts of their focus in terms of where they needed to kind of invest in the future and from capabilities. And of course, on the far right, some of the more foundational capabilities say we can't really be agile, we can't really be always on by on-premise or on desktop capabilities. A lot of these aspects of visibility and real-time decision-making are only unlocked by having the right kind of infrastructure and the right cloud environment, having the right kind of advantages through our data and analytics. But I think this view kind of really shows to say, yes, there is an opportunity for significant growth in the market, and the opportunity is really falling on the shoulders of supply chains as consumers are shifting their buying behavior. But I think that will require supply chains to kind of really invest in differentiated capabilities where it matters and really be able to capitalize on that growth. At the same time, really managing kind of their overall cost profile differently. And as a last page to summarize, what is future supply chain and how does it unlock new sources of value? To us, it's really our messages on two different fronts. One is supply chains need to be doing different things, right? And in terms of what is kind of enabling growth mean for my supply chain? Is it really going to be on significantly advantage in on-shelf availability and on time and full? Is it really in kind of high degree of customization of product? Is it really enabling the DTC model for my brand? Doing different things also includes supply chain embracing and enabling new business models. So we see a lot of opportunities for disrupting some of the traditional norms of, for example, how we supported traditional trade and independent grocers and a lot of away from home customers. A lot of opportunities to say, are there areas where we can go around our traditional distributor model and capitalize on some of that kind of margin that we are giving away. But at the same time, also building that proximity, that intimacy to our consumers, so we can start leveraging data and our consumer data as currency to inform our innovation, to inform our assortment, to inform our merchandising, marketing, all the way through. And on the right-hand side, doing things differently, again, with some of the examples we talked about, is the step up in productivity will require a very, very thorough look at how do we look at physical automation, how do we look at process automation, how do we repurpose and reallocate our existing resources who are maybe traditionally kind of grown up in supporting more manual work, but having machines do a lot of that work and then utilizing our people to make more strategic choices, to make smarter decisions, more exception-based planning, this and that. So I think that step up of productivity will come from physical automation and autonomous intelligence that needs to be part of our supply chains. And the final piece on kind of cost of ownership, I think as we look at kind of where are the big areas of investments, it automatically also tells supply chains where we need to have a lesser of a focus. I think some of the traditional norms of control and ownership of assets, whether it's manufacturing or kind of my distribution centers, but also of my fundamental capabilities and technology and how I think about planning. We see a significant move already happening where companies are beginning to think about how do I variabilize these big portions of my costs? How do I go from a fixed cost environment to pay-per-use environment, whether it's in my process, planning, fulfillment, or whether it's in my assets, manufacturing, distribution. And also looking at kind of benefiting from shared assets and managed services where we are tapping into an industry platform kind of versus kind of building it just for our own purposes, just for our own benefit. So to conclude here, again, kind of supply chain as a growth engine. I think consumers are really pushing us there, and it's really for brands and supply chains to decide how they are going to enable that growth. Yes, it is going to require new capabilities, and I think there's a lot of kind of exciting innovations and technologies and new ways of thinking that are coming through in terms of how supply chains are going to be built. And to conclude, it is going to require kind of doing different things and doing things differently with the right combination of a new, more open mindset, more adoption of technology and data, and also kind of a more future-ready workforce that's kind of enabling this as well. With that, maybe hand it back to Amy to see if there's any questions that we can help answer.
Thank you so much, Adheer and Chris. That was so insightful. I think you've certainly given some motivation to do things differently and to change the way we think about supply chain for those growth opportunities. So yep, we are at that portion for the Q&A. So as a reminder, if you have a question, please submit it using the Q&A panel at the bottom of your screen. And we've had a bunch come in. Adheer, I think you might be able to answer this first one. There is quite a lot of demand uncertainty. How will D2C evolve? What fulfillment models will stick? What should companies invest in right now?
That's really a critical question for a lot of supply chains, because on one hand, they're kind of having to solve day-to-day, hour-to-hour challenges and kind of mitigating some of the risks in the market. At the same time, they're having to look at sort of this uncertain view of the future, right? And what Amazon is going to do and what Walmart is going to do, and how do I think about my own growth, and do I try to build a supply chain that's going to kind of work with the micro fulfillment centers, or do I try to build my own partnerships? I think what we're seeing is what we would tell our supply chain friends is two things. One is, I think creating that readiness and having thought through all the different viable possible scenarios for how we might enable and unlock future kind of paths is really paramount. And why is it paramount? Is if we have that end state view clear, then we can make a lot of near-term decisions that allow us to converge to that end state. So I think that's one thing to say, having that future view, even if you don't invest in right now, in fact, don't invest everything right now, but having that readiness to know that if this happens, this is what we will do, has a significant effect in simplifying your day-to-day decision-making. At the same time, one area where we do see a big area and urgency on what we can do right now is when we think about technology and data, right? So as we think about it, look, no one really knows which DTC model is going to stick, right? How much is going to be click and collect in the future? How much is going to be home delivery? Very simply, how will, for my brand, my category, the sales will split across my retail customers, the Amazons, and what I can sell them on my own. But I think what we do know is, regardless of any of these, the need for agility and resiliency will not go away. The need to be more flexible, making more real-time read and response decisions will not go away. The complexity in my supply chain is going to increase. My ship to nodes are going to increase, my variety is going to increase. And what that really tells us is to say, while investments in physical assets, right, my next manufacturing plant, my next distribution center, you may not have to hurry to kind of really change kind of how your go-to-market. But I think investments in data, investments in technology, investments in end-to-end planning, execution, decision intelligence, how do we start embracing that future of work and future of workforce mindset on enabling decision automation, decision augmentation. We see these as absolutely no regret investments. So I guess to kind of conclude that answer, I think there are big decisions, right? Physical investments and kind of technology investments. I think the physical investments, we would recommend kind of having that blueprint and end state view, but then use near-term triggers to kind of inform investments. But all the investments on the technology side and workforce enablement, we see as kind of really no regret investments right now.
Thank you for that. Another one that came in, which I think is related to that, it says, have you looked at the impact of e-commerce on the CPG supply chains? A second part to that is, how should supply chains think about the financial impact on their total delivered costs?
I will take that as well. I think this is really the holy grail, if you may, in terms of understanding kind of how this is all impacting. And for us, we've had the kind of ability to look at some specific companies and their kind of how their P&Ls have evolved. I think, look, publicly, I think it's known that even Amazon has raised their fulfillment costs for their Fulfilled by Amazon by 30% just over the last 2 or 3 years. And it's no coincidence as to why that's happening. I think one thing we also know is the demand complexity that we are seeing with bifurcation of demand going across all these multiple routes to market and fulfillment models. At a minimum, we are seeing 20% to 30%. At a high end, we're seeing even 50% and above increase in kind of miles per case. So for every case that I'm selling, I'm adding that many miles, period, right? Just because of the fragmentation of demand, my ability to send full truckloads is shrinking, and my miles per case are going up by 20% to 50%. We're already seeing that flow through the data. So if you think about the end-to-end supply chain across design, buy, plan, make, move, and sell, our analysis of projecting is what e-commerce is going to do. And it's not just e-commerce, but it's all of those things combined as how consumers are buying differently and what that will require supply chains to do. We're saying a minimum 500 to 800 basis point impact on margins. And I think that's pretty shocking. It's pretty nerve-wracking, but we really see that as kind of a minimum expectation of how much more supply chain will kind of have to incur, which is why it's also very important, right, to say, unless and until supply chains become a growth engine, that type of a investment, that type of a kind of operating model and OpEx will really not be survivable, right? So I think that's what our message is, to say, yes, of course, as consumers shift, as demand fragments, as some of the complexity comes through, we are saying kind of, as we said, 500 to 800 basis point impact on your margins just from supply chain. But I think companies that are able to pivot their supply chains to enabling growth, this is also a phenomenal opportunity to gain significant share in the market.
Thank you. The next two, I think, are somewhat similar, and they're related to that new paradigm, right? The new parameters, the agility, the resiliency, and the sustainability. Where should a CPG company focus first out of these three? And then are all three needed to be successful in this current environment? Is that the new paradigm, all three, versus in the other scenario, I think you had said like service could be one, right? Quality could be one. What does the new future look like?
Sure, I can take that, and Chris, feel free to add. Look, I think even when we were in the traditional model of cost, service, quality, supply chain operators know that being good at all three is just not possible. And I think being really good at one is critical, right? So what is our fundamental kind of strength? And being good enough at the second, I think is kind of really makes you very competitive in the market. But at the end of the day, there are trade-offs involved, right? So kind of how do I think about agility versus resiliency and sustainability? So maybe easiest to think about a couple of examples, right? One is, let's say if I'm in a fast-moving consumer goods category with a lot of impulse buys, a lot of innovation, and short life cycle products, I need to really, really be good at agility, right? To say that is going to be my fundamental right to win in the marketplace, and my ability to be agile with kind of managing demand and supply is going to be paramount. On the other hand, companies that are still going to rely on kind of long innovation cycles, stable, a bit more stable products from an innovation perspective, and the consumer's buy decisions still going to be significantly made on pricing, they will need to focus more on resilience, right? To say, for us, kind of small mistakes in not being able to kind of manage supply disruptions, et cetera, are going to be a lot more kind of expensive from a supply chain perspective. But because we have a really long commercialization cycle, long innovation cycle, we don't need to be that agile, right? Because if I'm in a consumer staple, and let's say I'm in the paper category, my resiliency is a lot more important, but I don't need to have different type of paper towels or different type of rolls based on zip code, et cetera, right? So I think it really depends on the category and the mix and kind of how you see the growth playing out. But I think that's really where we see sort of the interplay between agility and resiliency. And the same thing goes for sustainability. Mm-hmm. Say, as a brand, based on my value chain, my tier 1, tier 2, tier 3 exposures, how big of an exposure do I have? How much more responsibility do I have to my community, to my shareholders? And that also drives kind of how much should I be focusing on my sustainability? So again, I think the short answer is that no, we don't really see prioritizing on all three. Okay. I think agility versus resiliency, there should be a clear prioritization that this is number one, this is number two. But what would be really nice if is the enterprise makes that decision collectively and not just supply chains on their own having to make these choices, because I think that's where that alignment at the company level is very important.
Yes.
And
yeah.
Just a quick add to that. What's underlying is you can no longer afford to have a single supply chain, that's configured to all of these unique customer demand profiles that you're now trying to serve. So a supply chain segmentation strategy is so critical to start to balance and understand, what those segments are and what customer profiles you're serving, to deploy some of the examples that Adheer talked about in regards to balancing agility and resiliency.
That's great. We have time for, I want to fit this one other question that came in. What is the outlook on the supply uncertainty? Are we expecting it to go back to normal?
I think
what is the normal, I guess.
Yeah, this disruption is the new normal, right?
Yeah.
And knowing that, that's why we are huge advocates that we have to make this pivot from from service quality costs to agility, sustainability, and resiliency. I mean, that's the simple answer. And if you don't, you're dead. Right. And that was the whole theme of really the context of our message.
Mm-hmm. All right. Well, thank you both, Adheer and Chris, for joining us today. And thank you to Accenture for their continued support of the Consumer Brands Association. I want to share 3 quick takeaways that I had from today's presentation. We need to start thinking about supply chain differently because the environment and consumer are constantly changing. The supply chain should be viewed as a growth engine for CPG companies in the future. And finally, that supply chains of the future need to align to a certain set of criteria, always on, fact-based, and intelligent, which sets companies up for success in a variety of scenarios. So thank you for joining today's session. Consumer Brands has several other industry insight sessions scheduled throughout the remainder of the year. So please visit our events and education page. A link is in the chat to view these sessions and to register. Thank you, and we will see you again soon.